You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Monday, 31st day of March, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first live broadcast, that's private, members only, and those taking the 1-week free trial. If you have not yet taken your 1-week free trial, when Michael joins us in about 50 minutes, he'll walk you through step by step right on the screen how to take the trial. There's no credit card required. You'll get 5 consecutive days and access to everything that a passport holder has access to. Not just the live training room, but everything, with only one exception, and that is the members only workshop every Thursday night at 8 p.m. Eastern. When the live training room ends at 11:30 a.m. Eastern each day, we take a 30-minute break and we come back for this broadcast, the afternoon broadcast, which, unlike the morning broadcast, is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. Best way, you only have to do it once. Go to mytradingiq.com, scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before the broadcast starts. In the email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you have access to the question box so that you can ask questions and participate in the discussion. Of course, there will be days when you're out of the office, away from your desktop, but you still want to join live. And there'll be days when you're just busy. You can't join live, but you do want to get caught up later. You can accomplish both of those via our YouTube channel, which is very easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. From where we started to where we are now. Obviously, you're not going to watch them all, nor do you need to. But it's a great resource to have at your fingertips to be able to see how we've evolved over the years. youtube.com/CFRN. Okay. Now that we have that out of the way, this is our afternoon schedule each and every day. We start out with our daily devotional, which we'll dive into right now. The topic we're on, and this is day 14 of 14, doing things that matter. Today's scripture is Romans 12, verses 1 through 2, and I'm going to share it with you from the Message translation. So here's what I want you to do. God helping you. Take your everyday, ordinary life. Your sleeping, eating, going to work, and walking around life, and place it before God as an offering. Embracing what God does for you is the best thing you can do for Him. Don't become so well adjusted to your culture that you fit into it without even thinking. Instead, fix your attention on God. You'll be changed from the inside out. Readily recognize what He wants from you and quickly respond to it. Unlike the culture around you, always dragging you down to its level of immaturity, God brings the best out of you, develops well-formed maturity in you. Again, that's Romans 12, verses 1 and 2. A story that matters. Living a life that matters must be full of actually doing all sorts of things that matter. Doing things that matter doesn't mean you have to create your own huge globe-spanning movement. No, instead it's contributing to the largest global spanning movement in the history of the world. Finding ways to live and be the person that God has created you to be. This is not about following religious rules or law. This is about love. This is about loving God, loving life, loving others, and as a result, having a life that you actually choose to live. I began telling our kids each morning as I dropped them off at school to do things that matter. It's funny how when you begin saying something like that, you actually find yourself living a life that is full of life. Doing things that matter won't happen by accident. They happen on purpose. Your story will become exactly what you lead it to become. If you want to have a life of watching TV and eating Cheetos, that will be your story. If you want to give your heart to anger, regret, or unforgiveness, then that will be your story. If you want to give your best to chasing money or obsessing over sports, then that will be your story. If you want to cling to security measures that keep you grounded in the sea of sameness, that will be your story. But if you become a person who has a life full of doing things that matter, then that will be your story. You only have one life to live, and no one is responsible for it but you. He calls us out of the mundane and mediocre, and He beckons us to experience life to the fullest. What if you allowed the seemingly impossible to become possible? What if every day you made choices that caused you to live differently? What if you loved God and others with reckless abandon and a selfless heart? What if you never allowed fear to stop you? If you pursue the journey to dream wildly, live differently, love recklessly, and lead courageously, all for the glory of God, you will discover a life that is well lived. Don't just do something, become someone. Wake up every day and choose to be who God has called you to be. Let's pray. Heavenly Father, thank you for your mercy and for your grace. Help us to offer our lives as living sacrifices, holy and pleasing in your sight. Transform our minds so we may no longer conform to the patterns of this world, but be renewed to know and follow your perfect will. It's in Jesus' name we believe and pray. And everybody said, amen. Amen and happy Monday. Hope you had a great weekend. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is up 10 points. The NASDAQ is down 270. That's over 1.5%. S&P 500 is down 37. The Russell 2000 is down 22. That's almost 1.25%. In the commodity basket, crude oil up $2.09, trading 71.45 last. That's a gain of just over 3%, or $2,009 per contract traded. Gold up $35.30, trading 3,149.50 last. That's a gain of almost 1.25%, or $3,500 per contract traded. Silver down 22 cents, trading 34.59 last. In the Asian markets at the close, the Nikkei dropped 1,502 points. That's just over 4%. The Shanghai dropped 15. The Hang Seng fell 307, and that's well over 1.25%. And in the European markets at the close, FTSE down 76, almost 1%. The DAX down 298. That's over 1.25%. And the CAC down 125. And for the CAC, that's a drop of over 1.5%. So we had a red day in Asia. It was a red day for the UK. And at the moment, it is a mixed radio Monday here in the US of A. But it looks like that's about to change because the Dow is only positive by 19 points. The other three major indices, the NQ, the S&P, and the Russell, those are all pretty deeply in the red. So I suspect that the Dow is going to follow the leader here, probably in the next few minutes or potentially during this broadcast. So let's take a look at the news. The death toll from the devastating earthquake in the Southeast Asian country of Myanmar over the weekend rose to at least 1,600 people, with reports suggesting a significant number of victims remain buried alive. Father, we pray for those souls. Dear God, let those first responders and everyone who's engaged in this search, Lord, help them, guide them by the power of the Holy Spirit. Show them where to look. Give them supernatural hearing so that they can hear those voices crying out to you, the ones buried beneath the rubble. Lord, just let your presence be felt. Back to the news. Rescue crews had largely not yet arrived in the most impacted areas, impeded by severely damaged roads and downed communications. The 7.7 magnitude quake rocked buildings as far away as Bangkok, which is roughly 600 miles from the epicenter. A number of viral videos quickly spread across social media, including people escaping a high-rise swimming pool and others running from a collapsing building. The disaster comes as Myanmar is in the grip of a years-long civil war after a 2021 coup with military leadership strictly limiting foreign assistance. Think about that for a minute. They don't want our help. The broader region was hit with a number of aftershocks. And while we're talking about Myanmar, there is a podcast called Scam Factory. You know, we're constantly warning you about all the new scams and how they're out to get you. Every day is a battle just to get up and go to work. I mean, forget doing your job. You spend half your time just trying to defend your workstation and keep the evildoers out. And this podcast series, I think there's 7 or 8 episodes, really changed my way of thinking. Because, you know, I get the same calls, the same text messages, the same emails as everybody else. And I used to ponder, man, how could anyone have such a hard heart and be so devious? Well, if you take the time to listen to Scam Factory, you're gonna be surprised too. The Philippines, which tends to be the scamsters at the top of the food chain, their hunting ground tends to be the Philippines. Now, English is taught as a first language in the schools in the Philippines, and you can hire laborers pretty cheap there. If they speak good English, you can run an ad offering some enormous, almost unbelievable sum of money. And then these young ladies and young men, they go through some type of vetting process in the Philippines. And then as they're approved and taken to their final destination where they're going to work. It usually happens overnight, by boat, sometimes by plane. But these young Filipinos wake up not in the Philippines, where they were told they were going to work, but in Myanmar, where the military rules who comes and who goes. These young people find themselves in basically a concentration camp. Block buildings, block walls, razor wire. They are trapped. And they're forced to work 10 to 14 hours a day, calling folks like you and I in the U.S. and forced at gunpoint, or the threat of the death of their family. They're forced to read these scripts over and over and over again. It's a hellish torture that you and I probably can't even imagine. So the next time one of those calls comes in, I'm not suggesting in any way that you should do what they're asking or telling you to do. Often they call as the IRS or the FBI or whoever. But the idea, of course, is to get you to send money to them. Not suggesting that you do that. I'm suggesting that you have some compassion for the individual. Now, it could be that you've got a true scammer on the other end of the line. Chances are they sound so nervous, not only because they're doing a job they're just learning, but if they don't produce, if they don't get results, bad things happen. Now, I know this started out as an article about this devastating earthquake in Southeast Asia. But there's another devastating thing going on there. And I just want you to be aware of it. Okay? And be ever vigilant. Be suspicious of every text, every email, even a phone call. It says right there on your phone that Grandma Jones is calling. You have no way of knowing if that's Grandma Jones. Especially if she's ever produced 20% of voice content and put it out on the internet. Because with the use of AI, they can make it sound just like Grandma Jones. No matter what question you ask, no matter what you know, but it's usually the other way around. It's the young person calling Grandma Jones. I'm in jail, I did this, I had a DUI, I need bail. And what do? Verify, verify, verify. If that person really is locked up in the jail they say they are, then you can say, I'm going to call the jail, and if you really are locked up, then I'll take care of your bail situation. You do not give your credit card number, your checking account number, or any other personal information to that person on the end of the phone, even though it sounds you grew up with your grandson grew up with you. You know his voice. Be careful. And pray. Pray for these young people. They're forced to work like slaves doing a job they don't want to do. They were just trying to make a better life for themselves and their families. Well, it's Final Four season. The men's college basketball Final Four was set yesterday with all four top seeds, Auburn, Duke, Houston, and Florida, advancing to the tournament semifinals. Marks the first time since 2008 that all four number one seeds have advanced. Elon Musk announced Friday that his artificial intelligence startup, XAI, would acquire his social media platform X in a deal valuing the network at about $33 billion. Musk said XAI would pay $45 billion for X while assuming $12 billion in outstanding debt left over from the 2022 purchase of the company. The move is the culmination of recent efforts by Musk to leverage X as a source of data to train large language models, most notably the XAI-owned Grok, G-R-O-K. Most of you are old enough to remember that book that talked about grokking back in the day, in the 60s. Grok is the latest model of which can be used within the X ecosystem. The company also rapidly built a massive server farm outside Memphis, Tennessee, dedicated to training its AI models, amassing a reported 200,000 AI-specific processors in about 7 months. It remains to be seen how or if the acquisition will change the user experience on X. Separately, Musk has recently split his time between his companies and political efforts, joining a rally in support of Wisconsin's Supreme Court candidate Brad Schimmel last night. The Tuesday election, tomorrow, has become a proxy for the national political climate and has drawn $81 million in spending, a record for a judicial race. Yeah, these judge robes are coming at quite a high price these days, now that the left has figured out how to supersede the Constitution with a lower court judge. It's pretty heinous, but it's the world we live in. So I guess we gotta get used to it. Fight, fight, fight. From Bloomberg, President Donald Trump said he was very angry at Vladimir Putin and threatened secondary tariffs on buyers of his country's oil if the Russian leader refuses a ceasefire with Ukraine. In comments reported by NBC News, Trump said he was, and I quote, pissed off at Putin for casting doubt on Ukrainian President Zelensky's legitimacy as a negotiating partner and threatens curbs on all oil coming out of Russia. He later added that he didn't think the Russian president would go back on his word. While the U.S. president appeared to temper his remarks, the threats mark a significant change of tone for Washington and suggest a possible souring in retaliations with his Russian counterpart over the pace of ceasefire talks. Before taking office, Trump said he could resolve the war quickly, but the conflict is still raging. Trump clarified in comments to reporters on Air Force One, "I certainly wouldn't want to put secondary tariffs on Russia, but he's disappointed with some of Putin's recent comments on Zelensky. He's supposed to be making a deal with him, whether you like him or don't like him. So I wasn't happy with that. But I think in the end, it's going to be good." Trump's frustration was sparked by comments Putin made on Friday that implicitly challenged Zelensky's legitimacy by proposing the United Nations should take over Ukraine with a temporary government overseen by the U.S. and possibly even some European countries. Well, looks like TikTok's days in the U.S. are numbered unless parent company ByteDance strikes a deal to sell the social media platform by Saturday, April 5th. That's when President Trump's extension for the company to be sold or shut down lapses. And unless he or Congress issues another extension or the company announces a buyer, it's the end for TikTok and its 170 million users. U.S. officials have long argued that the Chinese government, which is designated as a U.S. adversary, could gain access to Americans' TikTok user data for nefarious purposes or use the platform to spread propaganda. According to Trump, several suitors are looking to get their hands on TikTok. While he hasn't provided specifics, Bloomberg and The Information previously reported that Oracle, which serves as TikTok's cloud provider, is a front-runner in the race. Other parties seeking to scoop up the app include a group of investors led by Frank McCourt, Microsoft, and Walmart, who tried to buy TikTok in 2020 but were unsuccessful. Trump has also recently floated the idea of pulling back some of his tariffs on China if it helps push that country's government to support the sale of TikTok. Gold prices soared to record levels above $3,100 per ounce in a rally marking one of the most significant upswings in the precious metals history, with psychological levels swept aside by a cocktail of factors, including worry about fallout from impending U.S. tariffs. Spot gold hit a record today of $3,128.06 per ounce. Uncertainty surrounding U.S. President Donald Trump's tariffs added extra heat to the momentum pushing gold higher, including strong demand from central banks, expectations of interest rate easing by the Federal Reserve, geopolitical instability in the Middle East and Europe, and increased flows into gold-backed exchange-traded funds. Bullion is set to log its biggest quarterly rise since September of 1986 and has already posted 19 all-time highs in 2025, among which 7 are above the unprecedented 3,000 level mark. Prices are up 18% this year after surging 27% in 2024. And U.S. crude oil production fell by 305,000 barrels per day to 13.15 million in January, the lowest since February of 2024, according to the U.S. Energy Information Administration. That was the biggest decline in monthly U.S. oil output since January of last year. The EIA also lowered its estimates of record U.S. oil production in December by about 40,000 barrels per day to 13.45 million barrels per day. Big difference. Okay, on the home front. Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude, gold, silver. We're currently in week 348. Last week we ended up with 13% of the alerts stopped out. But when Valerie did the recap this morning, over the last 348 weeks, we've issued over 19,200 individual handcrafted alerts. And we've averaged on a weekly basis 20% or less being stopped out based on market structure, and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. So when Valerie did the recap this morning at 6:30 a.m. Eastern, we issued a total of 14 alerts last night. Markets opened at 6 p.m. Eastern. At the time of the recap, we were still waiting on the outcome of 8. We had 6 actionable alerts. And so far, nothing stopped out. So the week's off to a pretty good start. Every logic alert has an entry price, an initial target designed to help you get your goal for the day, additional targets quite often, and always a final trade to target. The purpose of the alerts is to teach you how to read a chart. You want to be able to look at a chart of any market in any time frame, and with the help of our humble indicator set, instinctively know what the next high probability move is. Nobody knows what's going to happen next in the market. It's not possible. You can guess and get lucky, but then eventually you're going to guess and get unlucky. But you can know with a great degree of certainty what the next high probability move is. Now that's very different from knowing what's going to happen next. With the understanding that 20% of the time or less, the market is going to do something other than the next high probability thing. So how do you know what the next high probability thing is? You got to learn to read the chart. You got to know where the next potential resistance is, the next potential support is, which uncovers the windows of opportunity that exist between those 2 points. Once you learn how to read a chart, you don't need our alerts, you don't need anybody's alerts, you simply need a chart with live data, and again with the use of our humble indicator set. You'll instinctively know what the next high probability move is. And when 20% of the time things don't go as planned, you simply shrug it off and move on to the next trade, because you understand that's how markets work. Okay? Now, 348 weeks and 19,200 individual alerts. That's a long time and a whole lot of alerts. But long before there was a Logic 247, we had our concierge trade alerts, and they're different. The Logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. But the CTAs, the concierge trade alerts, they're published shortly before or after the Globex opened each evening. I strive to get them out 5 minutes ahead of the open each evening, and I've done pretty good at it. The only days where it's difficult to do that is Sunday and Monday. So last night it was 20 minutes after the open. If you're a member, trial member, make sure you read this so you understand what's going on. If you have questions, ask. So what this means is last night, 20 minutes after the open. Now all alerts are created on a 30-minute chart. So 20 minutes into the first candle at the open last night, all members and trial members had these targets: the S&P, the Dow, Russell, crude oil, NQ, gold, and silver. 20 minutes after the open. So with that done, We shall now take a look at the chart. And we need to make a change. We talked about this last week. We said, number one, on Thursday night, we drew this line. And we said, if we trade through this line, there's a high probability that we're headed to this low that was put in on March 13th. And we talked about what would happen then is we would have to adjust this lowest fib to embrace whatever new low was put in. So that's exactly what we're going to do. You click that. Now these are reverse fibs because we're in a downtrend. Been in an uptrend for years, so we kept having to move the highest fib. In an uptrend, you draw from the low to the high, but in a downtrend, you draw from the high to the low. So the low of today's candle, 55.33.75. So I'll shoot for 55.34. It's hard to get it exact on the daily chart. So 55.30. So if we can do a little better. Could have done this before the broadcast started, but I wanted you guys to understand how to do it. So we're still trying to get to 34. It's a little difficult on the daily chart. So we got up to 32.75. Now what's the actual low? 33.75. So we're 1 point off. All right, I can live with that because it's a daily chart. So since the downtrend began, we've had a leg and a retracement and a leg. Now we would expect price to retrace back. Now this is an important price, important area. It was support. 2 weeks ago it was support every day of the week. But then we traded through it on Friday. So now as we move up, that becomes potential resistance. And then the 24 becomes potential resistance. And then the step line, blue and climbing, which is about to become red and falling. Depends on how high we can go today. Then the BBC, and then the 38%. And then this little double top right here. Okay. Now the green line, it's called the BBC, stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. The retracement to the BBC, whether you're pulling down from above or pulling up from below, the pullback holds more often than it doesn't, as it did in this case. This was Friday's candle, Thursday, Wednesday, Tuesday. So we completed the pullback last Monday. Then Tuesday we just kind of sat there, proud of ourselves. When the market has a wide-ranging day, it's not unusual for it to have a small range day following, and we did. And then the next day we get this and this, and then on Friday we did what we talked about Thursday night in the members only workshop. We broke through. Now there was potential support here, there was potential support here, and while on the way down those probably provided a little bit of a bump. We made it all the way down to 55.33.75. When we're off air, I'll see if I can get that any closer, but it's close enough for now. So, resistance here, we're talking 56, call it 56.50 to be very conservative. It's your next major resistance overhead. Okay. Now, how we close today will be very important. As you can see, overnight we traded all the way down here. Now we've made it all the way back here. Now the low of this candle right here, Friday's candle, that's potential resistance, and that's where we're hung up right now. We have to overcome this resistance before we can get to all the other ones that we just talked about. Keep in mind, institutional traders, the ones who actually move price because of their account size and the size they trade in, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. So whether you trade futures, stocks, crypto, Forex, ETFs, whatever, I encourage you to spend 2 minutes with the daily chart before you drop to your smaller time frame and start trading, so that you're able to identify major areas of support and resistance as we just did. Because a lot of it, when you drop to the smaller time frame, you won't be able to see it. Now, this is an extremely important level right here, but you won't see that on your smaller time frame because we drew it on the daily. Okay, just one example. Okay, so as I said earlier, all alerts, both the logic and the concierge, are created on the 30-minute chart. Nothing magical about 30 minutes. It's just the time frame I chose years ago, and I've stuck with it. If you find yourself time traveling, trying to find that perfect time, is it the 1 minute? Is it the 5 minute? Is it the 9 tick range? Is it the 35 tick range? Whatever. Stop. Okay? Whatever market you're trading, pick a time frame, stick with it, but learn to use multiple time frames. You need to be aware of what's happening in a larger time frame to make wise decisions in whatever time frame you're operating in. Trading with only one time frame is trading one eye blind. You can do that. It's your trading business, but I encourage you not to. The vertical lines, okay, separate today, Monday. This is Friday, Thursday, Wednesday. As you can see, we're been in quite a bit of a downtrend. Now, when price drops to a weekly trading zone, we look for support until proven otherwise. When price rallies up to a weekly zone, we expect resistance till proven otherwise. Resistance sends the market looking for support. Support sends us looking for resistance. Back to support, back to resistance, back to support, back to resistance. Over and over again and again. It's a never-ending cycle. 70% of the time, you're going to get this consolidation. It can look like this. It can look like this. It can look like this. 20% of the time, you'll get rejection, which looks like this. 10% of the time, you'll get the slice. That's when price slices through a weekly trading zone on the 30-minute chart like it's not even there. Now, under normal market conditions, what will happen is when that move runs out of steam, it will typically retrace back to the zone it sliced through, continue in the direction of the slice. And these are far from normal market conditions. The zones are published every Monday morning at 6:15 a.m. Eastern. We've published them for our members every week since December 14th of 2009. So a little over 15 years. Once they're published Monday morning, they're carved in stone for the entire week. Now, because all of these alerts were issued last night, we're using last week's zones, right? But anything issued after 6:15 a.m. Eastern today, that means anything going forward, will be based on this week's zones, which all of our members and all of our trial members got this morning at when? 6:15 a.m. Eastern. So tomorrow, during the broadcast, you'll see this week's zones on my chart. But because these alerts were issued based off last week's zones, that's why you're seeing those right now. This was the open last night. Now we opened down here and we ran up and we almost filled the gap on that first move. In fact, we may have. I think there's a little wick hiding behind there. But the gap has been filled with indices. It almost always is within a few hours, within the same session. Last week it took 4 days for the gap to fill. We had huge gaps, not last night, but a week ago across all the indices. So we opened below the BBC, so we instinctively expect lower prices. We also have red and falling. That speaks lower prices. And so price came down to the target. Support gave us a bounce, kind of traveled sideways, dropped to the short target multiple times. You only need 2 points to get your goal for the day. Now, from 55.75 to this little white line above, that's 5 points. See that little white line on there? 55.80. So from there to there, that's 5 points. You only need 2 points to get your goal for the day. So multiple opportunities along the way. Then we actually got below the short target. And then finally, off the 9:30 open this morning, buyers came in, drove us up, got us above the BBC. Red and falling turned to blue and climbing. We currently have the perfect stack. Price, step line, blue and climbing, and of course the step line is just now crossing the BBC, or blue and climbing is just now crossing. That's called a bullish cross, when the blue line gets above the green line. It's all very bullish. So where's price trying to take us? Well, if you look left, your first area for resistance is up here at 56.23. Then above that, you got last week's zone at 56.30/31. So 56.15 to 56.20, there's a nice 5-point opportunity in there, very conservative. Okay, but you got to wait for price to take this out, not by a tick. No. What's the high of that candle? 56.11.75. Okay, let price prove itself. Let it go to 56.15 and trade up to 56.20. That's 5 points. Remember, you only need 2 points to get your goal for the day. Now, price doesn't travel in a straight line, as you can see here. You had a green candle all the way up, and then it retraced back to here. Same thing here. Here, this candle was red until it ran into support at the step line. And once it got back up to its opening price and moved 1 tick above it, it turned green. Okay? So you got to be able to understand what the chart is telling you and what price is telling you. Okay. Now this particular candle has 4 minutes left in it. We've had a string of green candles. Just because if we end up, a lot can happen in 4 minutes. Even if we do end up with a red candle here, that does not mean the rally's over. It might simply mean we're getting a pullback to the step line, to the BBC. Price always reverts to the mean, and in our case the mean is green. It's called the BBC. And the pullback to the BBC holds more often than not. In this case, especially the fact that we've got support times 2 right here. Blue and climbing. That's if we get below the step line. So you got this low, you got blue and climbing, you got the BBC. So really you got support times 3 right there. That's if price makes it all the way down. On the Dow. Okay. This was the gap lower open last night, and it gapped right down to the weekly trading zone at 41,565/570. Now these are the zones that were published last Monday at 6:15 a.m. Eastern. Because these alerts were based on last week's zones, because this week's zones didn't come out until this morning at 6:15. So on tomorrow you'll see this week's zones on tomorrow's broadcast and every day this week. But once the zones are published, they're carved in stone for the entire week. So the market found support at the BBC, or at the weekly trading zone. When the market finds support, it's going to go look for resistance. Remember, the pullback holds more often than not. Resistance will send the market looking for support. 70% of the time, when you hit the zone, a zone, you're going to get consolidation. Right here, we reached down and hit the short target pretty much to the tick. We overshot it by a couple ticks. Support will send the market looking for resistance, which it found at the zone, and it's now consolidating sideways at the zone. You got a bullish cross here. Blue line got above the green line. So what do we expect? A retracement. So we're trying to get below the step line. Then this is blue and climbing, and then the BBC. Okay, we made it all the way to the Russell. Michael's going to give us a recap of what happened this morning in the live trading room, and then do some live trading on the TradingView platform. Then I'll come back. We'll finish the recap of the other markets and wrap things up with our good word for the day.
All right.
All right, looks good.
All right, here we go. Good afternoon, everyone. Today is Monday, the 31st and final day of March 2025. Now, if you have not taken a free trial with us and you want to take a free trial, go here to mytradingiq.com. Click on the purple button right here. There is no credit card required for the trial. Click on that purple button, and it's going to bring you to this registration page, where all that we ask for is your name, your email, and your phone number. Down here at the bottom, we need to get your TradingView login ID. Okay, we need TradingView login ID or username. I think they call it a username. We need to give that to us anyway. If you don't have one of those yet, click on this link. It'll bring you to this page. Just watch this little video. It's 3 minutes long. All right, watch that video. End up clicking on this link, and once you go there, sign up for one of these. I think it's 30 days free when you sign up for it. Switch to monthly and just sign up for one of these. All right. Once you do that, you're gonna have to pay for real-time data. You're not gonna get. I mean, you get this for free for 30 days, but the real-time data is not free. You got to pay $7 for the real-time data. All right. Watch that video. It goes through the whole thing. The spreadsheet. We had a pretty good day today. I talked a lot, so we didn't get as much trading done as we normally do, and we only had 23 trades this morning. So I was talking a lot. But anyway, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today's the 31st day of March 2025. We're up 111 ticks. 111 ticks on the NQ. We were minus 9 ticks on the Russell, plus 17 ticks on gold, and plus 34 ticks on the ES. That put us at $1,105 per contract this morning. Today it took 2 minutes and 1 trade to get to $1,100, so we took a total of 23 trades. So on the month now, we're up $26,805. That's over 16 trading days, averaging $1,675 per contract per 2-hour trading day. I'm sorry, let's go to the, I almost skipped the yearly. On the year now, we're up $84,287. So this is it after 3 months right now. So I took a week off and we had holidays in there and all that other stuff. But if we do 84,287 divided by 3. So we're averaging $29,000 per month per contract right now. Not too bad. Over 53 days, we're averaging $1,590 per contract per day on the whole year right now. Now, if you were to quit trading when you get your goal for the day, and you were to add 1 contract per month, so far this year, you would you'd have only had to work 8.38 hours, and you would have earned $17,077. So tomorrow we're going to 4 contracts. All right, tomorrow we'll be at 4 contracts, beginning of April, and you would have averaged $2,037 per hour so far this year. All right, let's get into the actual trades. Let me close some of these things. It looks like I have 4 of them open here. I do have 4 of them open. Okay, so here we go. We'll get into the trades now. On the gold, we did not have, actually, gold was our second most traded market this morning. But you see, I did some talking and showing what price should do this morning when I was drawing pictures and all that stuff. Gold was our example. So our very first trade, I believe it was on gold, right here, where we got the gold for the day. On this trade right here, we ended up picking up 11 ticks on that first trade. And then we stopped out on the second one. Now, I had my bracket wrong, so when we stopped out 10 ticks on the second one, if we had a 15-tick bracket, I think we would have made money on that. But I ended up stopping out because I only had a 10-tick bracket on. So we made 11 ticks on the first trade. We stopped out 10 on the second one. That put us at plus 1 tick. The third trade, we had to break even. Then we stopped out again, and that put us at minus 14 because I had changed the bracket to a 15-tick bracket. Well, the 15-tick stop anyway. And so we stopped out again, put us at minus 14. Then we had a nice win right there, plus 30, and that put us at plus 16. And then I did some talking and training and all that. And we had one more trade in here somewhere where I picked up 1 tick, and that put us at plus 17. That was gold this morning. Okay, that was the gold this morning. Now, the Russell. Let's see, on the Russell here. Our very first trade on the Russell was right here. We picked up 11 ticks on the first trade. Then we had a break even. Then I don't have the stop out, but we had a stop out in there somewhere on the Russell. But we lost 25 ticks because we were minus 14. And then right here, let me see if I can go find out where I stopped out. I drew a line on that one, so it wasn't there. We picked up that one right there. Where would I have stopped out? It would have been a flat spot somewhere. Probably right here. I don't know, I got to break even on that one. I don't know, but I stopped out somewhere before this because we went from minus 14 to minus 9, so we picked up 5 ticks right there. Somewhere in here I stopped out. Probably, no, that wasn't it. I don't know where it was. I don't see why I would have traded. Maybe it was right here. This might have been where I stopped out, right here. Here. That makes sense if it's right there. I can go check it out later and see, but it doesn't really matter. We did stop out minus 25 ticks. That put us at minus 14. And then we had a plus break even and a plus 5 to get us to minus 9. During the break, not a lot going on, but I did draw this in this morning saying this is where price should go once it breaks up above this level. It eventually, I was eyeballing it pretty much. I drew it really quickly, but if you look at it, my really quickly drawing happened twice. It got up to that level, and then it failed off of that level. Let me see who's in here this morning. See if any of the new people from the morning session are in here. Jessica's in here, that's one. And the other guys that were new in the morning are not in this session right now. But It did get up there a couple of times and it failed off of that. There was a trade right here from this right here. It went that much into profit before it moved against it. So there's a break-even trade right there. This one right here would have been on the Russell. You have to have 10 ticks in profit. So 17.0 up to 18.0 exactly. That would have been really close right there, but then it would have stopped you out. If you didn't lock in some profit or get it to break even. The next one was right here, and that one went all the way down here on a 19 range. So you would have had your break even or some profit in that one before it went up. This would have been a good trade right here. This would have been a good trade right here. And you got one going on right now that you can still short right now. Here, I'll short it right now. There, I just did. Bing. Now, this should actually get up to here. Right now, it should get up to the high at 20.5, which is okay because that's just right here. All right, so that'll keep us in the trade. And then it should push down to right here at 2017. Okay, so it should pull back up to here to 20.5 and then push all the way down here to 2017. So we should be able to make some money on this. We'll see. When you look at it this way, I know I'm doing this really fast, but I feel like I'm running out of time for some reason. But when you look at it this way, this is your move up. This is your retracement. So when it gets up here to the prior swing high, it should meet some resistance up there and push back down, and probably push down to about this level right here is what I'm thinking. Okay, but if you crunch it up like this, it found resistance here before a couple of times, and it should actually find resistance here again and push down from there. Okay, now that was something that I was going over last week a little bit. When you get the entry, you get your entry right here. That doesn't mean you should enter exactly at that point. If you see that it should be pulling back some more, let it pull back some more. Right? Let it pull back some more and take that better entry. Here's the trade right now. Okay, we got a window on top. Yeah, we do. So we can let that play out. Right, and that was the Russell. We ended up -9 on the Russell is what we ended up the morning session. Okay, we'll see what this one gives us, but we're -9 on the morning session on the Russell. Now the ES, we had the most trades actually on the ES today. So let's slide that all the way over. You see, I was talking about this kind of chop right here being the worst kind of chop because you don't know where the tops and the bottoms are. It took forever to get out of that. All the way over here is where I finally broke out of it. And went right back into it. Let's see. Anyway, let's go back to the beginning. Those are all trades that set up. Actually, the one that has 3 in a row right there, I guess there were trades that set up there. Okay. And that would be Tango. All right. So on the ES, it looks like we didn't have any trades until right here. We had a break even. Then we had a +4. And then we had a break even. And then we had a +12 to get us to 16. Then another 4 to get us to 20. And I talked some. Went from 20 to 22. And then 22 to 26. And then we had a break even. And then went from 26 to 34 on that last move right there. Okay. And that was it for the ES. Now, during the break, during the break, there was a trade right here. It would have been the open of this bar. That would have kept you in. It would have been the open of this bar. That would have, it might have stopped you out to the tick, but probably not. If you had a 10-tick stop on it, it would have been really close to stopping out to the tick, but then moved down nicely. It would have been the open of this bar. That went enough to get the stop to break even. Moving all the way over here. This was a good trade. This was a good trade. This was a good trade. This one right here. Whenever it's flat, I have to go check. Right? If it's not flat, I don't even need to look at it because I know if it's not flat, it worked out well. But when you hit a flat spot, you got to see if it would have gotten you to break even. So you would have been selling the open of this bar, right? And so if you, I have the TV trades on, so I could just look over here. We would have been selling the open of, what was I looking at? This bar right here. So the low of that bar from the top to the bottom is, from the open to the bottom was 4 ticks. And you see it right here. It was 4 ticks. So that's enough to get your stop to break even. All right, before it went up and would have stopped you out. If you didn't move your stop to break even, if you didn't have a risk management strategy that you follow all the time, then you might have stopped out on that. The next one right here, you would have stopped out on. Next one right here, that would have been a short. You would have stopped out eventually on that. Okay, this would have been a nice trade right there. That would have been a good trade. That would have been a good trade. That would have been a good enough trade. That would have been a good trade. This one, you would have been shorting this one. It went 4 ticks into profit again. The risk management strategy is what would have kept you in there. I mean, kept you out of stop now. And this one right here, the Russell trade's starting to work out. It needs to get down here to 0.2 for me to bump the stop to break even. Okay. This one right here would have worked out okay. It would have taken a little bit to do it. This one, actually, that would have given me the break even, I think, right? Now that would have stopped you out. This would break even. This would have been okay. Almost stopped you out. This, again, would have stopped out to the tick, I think. That would have been a good trade. That would have been a break-even trade. That would have been a good trade. That would have been a good trade. Good trade. And where does that bring us? All the way over here. And that was it for the ES. Whew. A lot of trades there on the ES today. Now, the NQ, which was our third most traded market this morning. We only have, we have 111 ticks on the NQ, but most of it was in 2 trades. I think all of it was in 2 trades. Those 2 right there. Okay, we started, oh, maybe it was more than 2. We started, yeah, I guess our very first trade on the NQ was right here, and we had a 75 tick win on the very first trade on the NQ. Then we had to break even. Then we had a +4 to get us to 79, and then a +30 something, 32, I think, to get us to 111. We had one more break-even trade in there. Now, those were all the trades that we took on the NQ, but that's not all the trades that there were on the NQ. Okay, there were a bunch more after that. I won't go through every one of them because I kind of want to get trading here. We're almost done with our time in here. Let me put up the question box. I hadn't looked at the questions yet. If anybody has any questions, just type them in, okay? Anybody who's watching right now, if you have any questions, just type them in. The only people who can see what you type in are me and Dwayne right now. All right, and that's almost always the case. It's either me and Dwayne and Valerie, me and Dwayne, me, Dwayne, or sometimes you might be able to throw Bert in there. So during the break, it was a short here, there was a long here, right there on that bar, that would have been a break even, a short here, a short here, that would have been a break even, a long there that would have worked, a short there that would have worked. Good, good, and nothing right now. So this is getting close to stopping us out. After getting pretty close to giving us enough to get the goal, I mean, to get the stop to break even, it's pretty close to stopping us out right now. So let's go take a look at what that actually looks like on the chart. Okay, so I shorted 20.5 is what I should have been shorting. Am I that far off on the entry? No, it wasn't there. Okay, it was over here. All right, yeah, okay, this is what it was. The entry was way down here. So I have a really good entry on this at 19.2. Okay, I shorted it right in here after it got into this bar. Once it was approaching the swing high right here is when I shorted it. All right, and it didn't quite give us enough to get the stop to break even, almost. But it's still not done yet. You know, it's still working itself out. And what I would look for now that it's stretched out this much, what I would look for is a move to right here, 17.2. Right? I think that's even lower than it was the last time I had done it. Right here. Okay, 17.5. I think that's pretty much what I said the last time, 17.5. So that's what it should go down to, right here. All right. All right. It's coming around. It's going to do it. 17.5 right here. I'll draw a line on it now for you. Right there. It's like a magnet now. It's going to draw it down to it. We'll see. Over here on the NQ, this bar did not paint. So let's see if we can fix that issue. Okay. It didn't lead and it didn't paint. So let's put this in here And this over here. Okay, there we go. Look, we can get our stop to break even now. So we're not going to stop out on the Russell trade. And we're almost down to where I said it was going to go. So I'm going to lock in some profit right here. There we go. I'm going to lock in 10 ticks. We just got to where I said it was going to go. Okay, so I'm going to lock in 12 ticks. And I'm out with 12. How's that for sticking it out? And I'm going to jump in right here if it fills me. We are at a great spot for it to bounce right here. So I hope it does fill me here and doesn't run away from me. There we go. We're filled now. Going in the opposite direction. Okay, so this should go up above the prior swing high right now. Should go up above 21.6. 21.6 up here. Okay, that's what it should do. So right now, 10 ticks in profit, and we'll bump that stop to break even. Okay, so get up to 19.1. And we'll just hit the break even button on it. Almost there. And then it's Tango again. He wants to be lifted up to the sink to have a drink. I built him a set of stairs. That matched the tile on the floor. All right. So we just have to wait here. Let it do its thing. It seems like I should have probably had my stop at break even already, right? It just should have been at 17.5. I'm at 18.1. I'm off a bit on the entry. If I was in at the right spot, I would have had my stop at break even already. Yeah, we were pretty close on that one. Let's click here. Right now, it's got a 25 tick stop. Okay. So if I'd had a better entry on that, then we'd have had to stop at break even. But it looks like it could possibly stop me out. If it's gone down this far through there, it should retrace all the way down here, which will stop me out like that. Okay, but if I'd had a better entry on that right here, if I'd had a better entry, we'd have had to stop at break even. But the first part happened exactly like we thought it was going to. Got down to here, found support, bounced up, and now it's moving back down. And you know what we're doing here is no different than what we were going over here on the daily chart for the last week. When we were looking for it to break down, when Dwayne was doing his bigger picture stuff, we had in here, this is why I had that way this morning. Wasn't there. It was on the, I guess it was there, wasn't it? It's in here. We had the MA1 and the BBC on there. So we were talking about this before, about this being the retracement and it failing here at the BBC and then finding support here at the MA1. Then getting below the MA1 and using it as resistance and pushing all the way down here to the swing low. It's all the same stuff as it is right here in the smaller time frame. Okay, since it broke through the midpoint, it should stop right about here. Okay, and make a move back up toward the midpoint right there. That's what it should do. All right. Let's see. Any other markets have any trades here right now? Nothing there, nothing there, nothing there. And there's one trade over here on gold that's moving just a little bit. Okay, let's bump this back. All right. Oops. All right, what time is it? It's 1:21, so we have 9 minutes left in here. I don't know if we're going to get another trade. Things are going pretty slow right now. One thing I wanted to go through, and not here, I guess I can go here. The economic calendar. The rest of the week, there's a lot of stuff this week. It's the first week of the month. There's more news events this week than there are the rest of the month. Starting tomorrow in Europe, there's all this high impact stuff at 5 a.m. in Europe. And then we have high impact JOLTS job openings at 10 o'clock. And then on Wednesday, we have ADP employment change comes out Wednesday at 8:15 in the pre-market. Okay, now they call it high impact, but that's not the real big one. The big one is going to be coming on Friday next week. But on Thursday, there's still high impact stuff, the jobless claims and the ISM services PMI. But the really big one is here on Friday. We have the unemployment rate, the earnings, non-farm payrolls. That's the biggest. And Powell's going to be speaking, lucky, at 11:25. So just as the room ends on Friday. Again, I'm not going to be here Thursday and Friday this week, so you guys will be able to enjoy all that fun without me. And I am good through Wednesday this week. All right, now I gotta stop clicking on things. I don't know where they are. Nothing here, nothing here, nothing here, nothing here. All right. There's a short here on the NQ. Now the NQ should retrace up to about right here. All right. So selling at the open of the bar isn't the best spot there, but selling on a pullback beyond the open of the bar somewhere in here should be a pretty good spot to sell. All right. You should see it move down here. Now the black line didn't print, so I'm not sure that that's a valid trade. Let me just make sure. All right. Let me do that again. Okay. So the black line went with it. So it's really not a valid trade in here because the black line went with it. But if you were doing trend trades and you were doing the aggressive trend trade, then you would do it without the slingshot, and you'd be the aggressive trend trade. You would sell every time this went into the overbought when you're below the YBR. Sell every time it went into the overbought. All right. If you're doing the conservative trend trade, you would sell when it comes out of the overbought when you're below the YBR. Okay. So there's a couple of ways you can enter this right now. I just entered it right here. Right. My stop's kind of going to break even right now. And now I'm going to lock in a little bit on this. There's 12 ticks right there. Okay, I'm going to hold on to that and lock in 20 ticks right there. Okay, so our target is down at 75 ticks. Now the swing low is at 2018. 2018, our target is at 2024. So we should hit our target. We should hit 75 tick profit target. So I'm going to get 20 or 75. Let's see what happens here. See, this is 50% of this leg length right here. It's finding support here right now. If it breaks through that support, it should go right down and hit our target at 75 ticks. Okay. There it goes. We get a down close on this bar. We should hit that target. There's 75 right there. We should go right through that. I am going to lock in a little bit more just in case. Nope, we just went right through it. All right, there's 75 ticks. Now, you could play that 3 different ways, right? Well, actually 2, because if you had the slingshot on there, it wasn't a valid trade. But with the slingshot off, the aggressive trend trade worked, and the conservative trend trade also worked. Okay, you guys follow that? Anybody have any questions? Jessica, you have any questions? Just type them into the box. All right, it's 1:27, so I'm going to wrap up here in 2 minutes. I'm going to wrap it up. There's a long trade here from the swing low. That should be a good long trade from the swing low. It's too late to get into it, but if I was paying attention, I'd jumped on that. If you get an opportunity at the swing low, at the swing high, or at the 50% mark, those are good opportunities to trade. Okay, this one already went. No. The entry should have been here at 23 and a quarter. We'll say 23, and it ran, well, put this guy on there. I don't have the 2 trades on there. Okay. The entry should have been there, and the buy profit ran, this one ran 44 ticks. 44 ticks up from the entry point. That's twice the goal for the day. Put that there, this here, this here, and this here. All right. So right here, is a short on the ES. Now, it should pull back a little bit more. Now, one of the things that I briefly talked about this morning that I really didn't get into was reading the DOM. Okay. You see the number right here? This number up here and that number up there. These numbers way down here. It's not a reason to enter a trade, but once you get into a trade, see the number up there that's trying to get to 275. Once you get into a trade, like this is what I was just saying, it wants to pull back up to here. So this is a good spot to enter this right here. All right, right here. Now I should have probably entered at the top of that bar, but because right now this wants to move down into here. Now that's basically the conservative entry, the down close right in there. If you take the black one off of there, and we're below the YBR. So let me just bump the stop here, like I should, to break even. Waiting for it to hit 0.25. There it is. Stop to break even. Okay, so make sure this window's on top. So in here, if you take the black line off of there, right? If you take the slingshot off of there, the conservative trade would be to enter right here. I'm sorry, the aggressive trade would be to enter right here. The conservative trade would be to enter when it comes out of the overbought. What I was suggesting is because it was trying to get up to the prior swing high, don't enter here, let it pull back a little bit more. And that's what I did. I let it pull back a little bit more and I entered up here at the swing high. Okay. I know I just got to break even on that, but you had opportunity to take more profit in that. Okay, it was a good chance to take some good profit in that. And the follow-up trade right here just went up in the other direction. The NQ's got a trade over there. The NQ's in a pretty nice chop right here. This is a pretty good chop on the NQ. You should have been shorting up here at the top of this bar at 45 and a quarter. Okay, and the gold. Now the gold's at a bounce spot because it's a swing low. It's coming off the swing low right here. But it should only run up to about right here, 50.4. Okay. So do your risk reward analysis based on that. Okay, I ran over. Sorry about that. So if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Click on that. It's going to be to the registration page. Fill out the registration page. All we ask for is your name, your email, your phone number. Down here at the bottom gives you TradingView login ID. If you don't have a TradingView login ID, click on this right here. All right, click on that. Hit register. And once you do all that, we'll know that you registered and we'll set you up. We'll give you all the information you need to get into the room in the morning and to get your indicators indicating. Okay. And that is it. With that, we can pass it back out to fabulous Phoenix, Arizona in Studio A overlooking South Mountain, America's largest city park. Dwayne is ready.
Yes, sir. Ready. Recap of the morning session.
Today it took 2 minutes and 1 trade to reach $1,100.
Good job.
Thank you very much.
Okay, guys, we'll pick up where we left off with the Russell. This was the gap lower open last night. That gap has not filled. Now, on the gap lower open, we're below the BBC, so we expect lower prices, and lower prices we got. All the way down to the short target, where we consolidated. And then here, at the 9:30 opening bell on Wall Street, this candle was red all the way down to here. But by the time the 30-minute candle closed, it was back here. Now, for price to move up, takes financial commitment. For price to drop, all you need is an absence of buying on the institutional level. So buyers, institutional buyers saw this as a bargain, drove us back up, and then we finally got above the BBC. First attempt we didn't make it. Next attempt we got above, and then the retracement held. Then we got another leg creating a little double top right there, and then a retracement back to blue and climbing. But we stayed above the BBC and we're still above it. However, things may be about to change because the step line has gotten directly above price, so that makes it potential resistance. Now the pullback has held several times, but this time we may trade through. If we get above the step line, then you have a nice window of opportunity up here. If we take out this low right here, then you could trade 2012 down to 2010, and then you've got a whole lot of opportunity down in this area here. You got potential support here, here, and then lots of room to drop. On the NQ, gap lower open, hit the short target, consolidated a bit, dropped to red and falling, which when it gets directly below price, you can see becomes support because it's usually on its way to becoming blue and climbing, which pushed it back up to the short target, which became resistance. When you trade through a short target and price pulls back like it did here, here, and here, you can expect it to potentially become resistance. So we got a leg and a retracement, a leg and a retracement, a leg and a retracement, and now we're just consolidating sideways right at that short target. Crude oil went on a rampage today. There we go. So this was the gap higher open last night, which did fill, and in doing so we hit the short target and we overshot Friday's low by a little bit. Buyers came in, pushed us back up into red and falling resistance, which sent us back down to this area here, support right at the zone. Then we got a leg, a retracement, pullback held, then a leg that took us all the way to the long target. Then we got a retracement back to the BBC. The pullback held, and it held, and it held, and then some news came out this morning, and the 9:30 bell on Wall Street happened, and now you can see from 69.10 to 71.10. That's $2,000 per contract traded. If it had gotten up to 72.10, it would have been 3,000. So as you can see, the step line is now crossing blue and climbing, and on the way up they were parallel. Price, step line, blue and climbing, BBC, the perfect stack. But once the step line crosses to the right side of blue and climbing, as it's in the process of doing right now, you're most likely to get a retracement. Possibly back to the zone, possibly all the way back to the BBC. In fact, if there's any sideways movement at all on the retracement, then the BBC may rise, and so if the BBC gets to this zone from last week, 7065/70, then that would be a great place for support times 2. Gold. This was the opening candle last night. We got a leg and a retracement to the BBC, pullback held, and that took us all the way to the long target. We spiked it, closed below it. Next candle took us back above it, took us all the way to the zone. So we hit the zone, we retraced to the BBC, back to the zone, back to the BBC, back to the zone, and now this thing is tightening up right here. We're still above the BBC, but we got red and falling in the mix. So you got potential resistance right here, then at the zone. And on the way down, you got support, potential support here, and then the top of the long target, and here. Silver. This is where we opened. We're below the BBC. We pulled up, and it held. Gave us a leg down. This low runs right across this area right here. Okay. Buyers came in, got us above the BBC. We didn't make it all the way to the previous bearish cross. We then get back below the BBC with red and falling. So we get a leg, a retracement, a leg, a retracement, a leg, a retracement. Now we're just sitting above that zone. We're below the BBC. Resistance, potentially, and red and falling, which is potential support, and of course the zone from last week is potential support. So that covers all the markets. We got a new low on the day, okay, and if price continues lower, we'll move it down just like we did today. But the one line that will never move would be this one, because that's always going to be the high of this particular downtrend. Got a leg and a retracement and a leg. Now, in order for price to return to an uptrend, got a lot of work to do. It's got to overcome this, 24, the step line, blue and climbing, which may become red and falling, BBC, the 38, the 50, the 62, and of course this bearish cross is potential resistance. To become a member, send an email to support@cfrn.net. For more information, you can go to mytradingiq.com. But when you're ready to become a member, send your email to support@cfrn.net, In the subject line, put, "I would like to become a member." In the body of the email, put your name, your phone number. Not going to call you, but we'll send you an email that explains everything it means to become a passport holder, and we'll provide you a link you can click to actually become a member. Number one, you're going to get 2 hours of live training every trading day. That's an interactive environment. Live trades in real time while you ask every question that pops into your head and trade along in your demo account until you qualify to go live. Along with 2 hours of group training every day, you get private one-on-one mentoring. As a passport holder, the methodology, the strategy you learn, the indicators that you own are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. As a passport holder, you'll get the Logic 247 alerts around the clock. Concierge trade alerts the second they're published each evening. Monday mornings at 6:15 a.m. Eastern, you get the weekly trading zones. Once they're published Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. They do not change in any way whatsoever. You're also able to attend the members only workshop every Thursday night at 8 p.m. Eastern. And you get the golden key that unlocks all the channels in Telegram. We got public channels, we got private channels, but once you become a passport holder, then you have access to everything. Everything a trader needs, all under one roof, one low price. So we'll wrap it up with our good word for the day. Today we're going to talk about what you will do in heaven. Ever wondered about that? Revelation 21:1. Then I saw a new heaven and a new earth. Perhaps the reason some people are not as excited about heaven as they should be is because they have no idea what to expect heaven to be like. One thing we can look forward to is finally getting to meet Jesus face to face and being able to worship him freely without persecution. But worshiping him will not just consist of singing songs of worship forevermore. Think about it. When the singing and prayers in the average Sunday morning service last longer than 15 minutes, many people get bored. But we will also be worshiping God in celebration of his amazing creations, which as we explore them will be beyond our imagination. Astronomers approximate the existence of hundreds of billions of galaxies, more than 10 galaxies for each person alive today. So you won't run out of things to do in heaven, and it certainly won't be boring. It has taken thousands of years for billions of humans to explore a single tiny planet, and we've barely scratched the surface. Exploring the marvels of the new heavens and the new earth will keep us intrigued forever, and our love for God will grow infinitely bigger as a result. So we will never cease to worship him. Jesus told the woman at the well that God is looking for those who worship in the Spirit and in truth. John 4:23. If you worship out of ignorance, worship is empty. God doesn't just want you to worship him. He wants to know who you are worshiping and why you are worshiping him. Worship is twofold, in the Spirit and in truth. So learning the truth about God will keep you busy, excited, satisfied, and fulfilled for all eternity. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.